Welcome to the deep dive. Today we're digging into Viking Holdings' latest results, specifically their Q2 2025 financials.
Yeah, it's a really interesting look at how they're performing and what's potentially ahead for them and maybe even the luxury travel sector.
Exactly. We want to unpack the key figures, see what's driving their performance, and, what their plans might tell us.
Sounds good.
So let's jump right in. Q2 2025 financials. They posted some pretty remarkable numbers.
They really did. Strong growth across the board.
Total revenue hit was at $1.88 billion. That's up 18.5% from last year.
Yeah, quite a jump. And importantly, that translated well operationally. Their adjusted EBITDA, which kind of strips out some of the noise, soared by 28.5%.
It's around $633 million, right?
Exactly. Shows real strength in the core business. And net yield, basically revenue per passenger day after some costs, was up 8% to $607.
And the bottom line, earnings per share.
Both diluted EPS and the adjusted figure landed at 0.99 cents for the quarter. Solid performance there.
Okay, so what were the main engines behind this? How did they actually achieve that growth?
Well, it really boiled down to a few key things. First, they had more capacity available, about 8.8% more capacity passenger cruise days, or PCDs.
PCDs, right. So more potential days for passengers to be on board.
Precisely. And that came from adding ships, 3 new river vessels, 1 more ocean ship, and this Viking E-Done accommodation deal they have.
And they filled that extra capacity.
They did. Occupancy was strong at 95.6%, nearly full ships. Plus, they managed to increase the revenue they got per passenger day. So more capacity, high occupancy, and higher revenue per person.
Got it. Now, I did see the net income figure jumped dramatically, like from $160 million last year to over $439 million this quarter. That seems huge.
It does look huge on the surface. But it's important to remember last year's Q2 number was dragged down by some pretty significant financial items.
Okay. Not purely operational then.
No. They had big losses from warrant revaluations and some derivative losses in Q2 2024, totaling nearly $190 million combined. Those weren't tied to selling cruises.
Right.
So the adjusted net income gives a, let's say, clear operational comparison. That was $439 million this quarter versus about $349 million in Q2 24. Still a very healthy increase, showing real operational improvement.
That makes sense. So switching gears slightly, costs. Expanding like this often means rising costs. How do they manage that side?
That's always the balancing act, isn't it? Vessel operating costs, excluding fuel, did go up by about 17.7%.
Which sounds like a lot, but
it mostly reflects having that larger fleet running. When you look at it per capacity PCD, the increase was more like 8.2%.
okay, more manageable. What drove that increase per day?
Primarily changes in where they were sailing the itinerary mix and just higher port charges, things like that. Your CFO, Leah Talaktak, specifically mentioned they're always focused on optimizing costs and how they deploy the ships.
And I saw they're doing some things with currency hedging. That seems smart, given their global operations.
Very smart. They're quite proactive there. They've hedged EUR $470 million for 2025 and another EUR $500 million for 2026.
Locking in rates?
Yeah, at a weighted rate around $1 one tail per euro. It helps manage that volatility. And they've also shifted strategy slightly. They're holding more cash in euros to naturally hedge their euro-denominated loans.
How does that work?
Basically, it avoids booking potential paper losses if the euro fluctuates wildly against the dollar. It did slightly impact their adjusted EPS in Q1 and Q2 by about 11 cents total. But it's a defensive move against bigger potential future swings.
Yeah.
Shows they're thinking long-term about stability.
So putting it all together, strong revenue, managed costs, proactive hedging, what does their overall financial health look like, balance sheet-wise?
It looks exceptionally strong, actually. They're sitting on $2.6 billion in cash and equivalents. Plus, they have access to an undrawn $375 million credit line, a revolver facility.
Oh, good cushion.
A very good cushion. And their net leverage is only 2.1 times their earnings, which is quite healthy, very manageable debt levels.
And what about those advanced bookings I hear so much about with Viking?
That's probably one of the most impressive parts. Their deferred revenue, that's basically cash collected for future cruises, hit $4.4 billion.
Wow.
Yeah. It's a massive number and shows just how strong demand is looking forward. It also means they generate a lot of cash up front, which helps fund growth. And their debt payments are structured well, manageable amounts due in 25 and 26, with the bigger bond maturities pushed out to 2027 and beyond.
Okay, that robust financial picture sets the stage nicely for looking ahead. Let's talk about that forward guidance and the booking situation. How are things shaping up for 2025 and even 2026?
The outlook is, frankly, incredible. For the 2025 season, as of early August, they had already sold 96% of their core product capacity.
96% for the whole year.
Pretty much, it's essentially sold out. Their advanced bookings for 25 are at $5.6 billion. That's up 21% compared to the same point for the 2024 season, even though their capacity grew by 12%.
That's remarkable demand. What about 2026? It seems early, but
They're already way ahead there, too. For 2026, they've sold 55% of their capacity already. Advanced bookings stand at $3.9 billion, which is 13% higher than 2025 was at the same point last year. And again, that's with capacity set to grow another 9%.
sustained demand seems like an understatement. Does this strength vary between their ocean and river cruises, or is it strong across both?
Both are doing very well, but there are some slight differences. For ocean, 95% of 2025 is sold, $2.5 billion in advanced bookings. That's up a huge 29%. The average rate per day is about $720 for 25,
And 26 for ocean.
and 64% sold already. Almost $2 billion in bookings, up 19%, and the rate is climbing to $780 per day. Ocean capacity itself is growing fast, 18% in 25, and another 9% planned for 26.
Okay, and how about their original bread and butter, the river
Okay.
cruises?
Even stronger for 2025, actually. 97% sold. That represents $2.7 billion in advanced bookings, up 16%. And the average rate per day is higher, too, around 819% for 25.
Wow.
For 2026 River, they're at 45% sold, which is still very strong that far out. Bookings are up 5% to nearly $1.6 billion, and the rates are pushing even higher to $940 per day on average.
So higher price points on the rivers for 26.
Seems that way. River capacity is growing too, 6% in 25 and 9% in 26, though they did mention a slight shift. 2 river ships originally planned for 25 will now arrive in 26.
Management must be feeling pretty confident then. What are they saying about maintaining this, especially on pricing?
Oh, definitely confident. Torstein Hagen, the chairman and CEO, talks about sustained strength in demand and a very strong start for 2026.
And the CFO?
Leah Talaktak echoed that. Said they had outstanding June and July bookings and it continued into August. She emphasized consumer behavior is holding steady, no signs of weakness.
And pricing strategy, are they just pushing rates as high as possible?
Hagen talks about balancing good returns with giving guests value. But Leah Talaktak did confirm they're aiming for mid-single-digit price increases for 2026. So those average rates we mentioned, around $800, $900 a day, seem to be the target.
And the economics of the ships themselves must be pretty good with this demand.
Extremely good. They mentioned payback periods of just 5-6 years for ocean ships and even quicker, 4 or 5 years, for river ships. And that's before you even consider the guests pay, on average, 7-8 months in advance. That advanced cash flow is huge.
So with all this demand, how are they actually planning to grow? What's the fleet expansion strategy look like?
They're actively adding ships. They just took delivery of the Viking Vesta ocean ship and a river vessel, the Viking Amun, for the Nile.
Expanding on the Nile, interesting.
Yeah, and looking further out, they've got plans for 2 new river vessels, specifically for India, launching in 27 and 28, plus another 6 river vessels expected by the end of this year, 2025.
So a significant number of ships coming online. How big is the fleet now?
It's substantial. 85 river vessels. And crucially, they control 110 docking locations on those rivers, a big competitive advantage. Then 12 ocean ships, all nearly identical with 100% balconies, and 2 expedition ships.
And their design philosophy. I know Hagen talks about that a lot.
He does. It's all about optimizing space, efficiency, and passenger experience. They're even launching their first hydrogen-powered ship, the Viking Libra, in 2026, plus using things like scrubbers and shore power. Hagen always emphasizes they build for the thinking person, focusing on the destination, not being a floating theme park.
Right.
He also stresses they get good prices on ships because their designs are standardized and efficient, and they negotiate directly.
Okay. Now, I saw there was a secondary share offering back in May. What was that about? Did the company raise money?
No, that wasn't the company raising capital. It was existing shareholders, TPG Capital and CPP Investments, selling some of their shares. About 30.5 million shares.
So just diversifying the shareholder base.
Exactly. It increases the number of shares available for trading, brings in more institutional investors, that sort of thing. Didn't change the company's cash position.
And speaking of cash, what's their plan for capital allocation? Dividends? Buybacks? Or just growth?
Right now, the focus is definitely growth. Leah Talaktak said dividends or buybacks aren't on the immediate horizon, though they're options for the longer term. She really emphasized the value of that big cash reserve they have as a buffer and for funding expansion.
Any talk of acquisitions? M&A?
They're open to it, but very selective. The criteria are strict. It has to be scalable, accretive to margins, and fit the brand. Like the India itineraries they launched, that was a successful strategic move. Hagen reinforced what he calls an owner's mentality. They scrutinize deals very carefully.
Okay, so bringing it all together, competition. How do they view competition, especially with this unique model they have? How do they maintain that appeal?
Hagen seems quite confident. On the riverside, he downplays new entrants, highlighting their long history and, critically, that control over prime docking spots. That's a huge barrier to entry.
Or to replicate?
Very. And for ocean, he believes their demand comes from guests actively seeking their kind of experience, quiet, serene, culturally focused. He directly contrasts it with floating theme parks.
The whole no kids, no casinos thing.
Exactly. No children, no casinos, no nickel and diming. That promise really resonates with their target audience. He's also famously resistant to constant small changes. He prefers revolutions, not evolutions,
I mean,
meaning big strategic moves based on their patented designs and experienced staff, rather than tinkering constantly. Consistency is key. And they leverage that brand strength to expand into new, high-value markets like Egypt and India, using smaller, tailored ships. It's all driven by research into what their loyal guests want next.
and China was mentioned too.
Yeah, as a large, potential future market. It fits their pattern of identifying destinations their core demographic wants to explore safely and comfortably with a brand they trust.
So it really seems like Viking's strategy isn't just about fleet size, is it? It's more about building this community of curious travelers who value time and a specific kind of experience.
Absolutely, they've carved out a very distinct niche.
So thinking about all this, what does Viking's success and strategy suggest about where luxury travel might be heading? Especially for travelers who aren't just looking for a place to go, but for a very particular, consistent, culturally rich experience away from the mainstream noise.